It's been over 2 months since I last did a Vanguard portfolio update, so today we're going to do exactly that. For those of you who don't know, I had an ISA account with Vanguard in the last tax year. I currently do not use this ISA, which means I no longer contribute any new money to it. But of course, every now and then I like to go in and just take a look at the account and just see how my investments are doing. So no messing around here, we're going to get straight into it. When I last filmed a Vanguard portfolio update, my total ISA value in the account sat at £6,153.18, and you can see that it's now sitting at £6,350.52. So it's increased a little bit. And that is not due to adding any more money into the account. This is purely growth of the account. The largest holding is still VUSA, the S&P 500 tracker. It makes up 68.62% of the ISA, very, very similar to last time. And the available cash has increased slightly. Last time it was 61.15 and now it's 73.79. And that's because I was paid a dividend in this account, which we'll get to in a minute. The first thing I just want to say is the personal rate of return. This is since the account opened. Now this is currently green, which means it's in the positive, and it's sitting at £8.74%, which is quite a nice personal rate of return. Last time it was 2.52. Now, one thing to really note about the personal rate of return is that it uses a calculation to figure this out. And that calculation includes any money that you put into the account. So you've got to be really careful. Let's say you watch someone on YouTube or you follow someone online, whatever it may be, even a friend in real life. Who has them anymore? I don't know. but let's just say that you see someone's account for whatever reason, and you can see that their personal rate of return is sitting at 25%. And you're probably thinking, what on earth are they investing in to beat the market like that? They're probably not. Quite honestly, either they're really, really good at investing and they're just like annihilating the general average of the stock market returns, or they're putting a lot of new money over a short space of time into their account, which is of course then increasing their personal rate of return because the overall amount of the portfolio is shooting up. The personal rate of return is therefore shooting up. So just bear that in mind. One thing that I'm quite happy with now is I've not put in any new money into this account at all, so that's now not coming into play. So this is of course since the account opened, so I obviously have put money into the account before, but what we can do is we can compare the personal rate of return this time to last time because no new money has been put in. And that allows us just to see how my investments are doing in terms of their growth and their performance. Which, like I said, last time was 2.52%. This time it's 8.74%. So over the last 2 months, roughly 2 months and a few days, this portfolio has been doing a lot better, which is really, really nice to see. And this is a really, really simple portfolio. I'll show you exactly what I've got in it now. So let's just go over to the investments page and see what I'm holding in this account. Like I said, you're not seeing any individual stocks. You're not seeing anything too fancy. This is a Vanguard ISA, right? And Vanguard only allow you to invest into their funds. There's no individual stocks and there's no funds belonging to any other company. So I've got two. My largest holding is in VUSA, S&P 500 ETF, and that is 68.62% of the entire portfolio. So the largest holding is VUSA. And actually, funnily enough, VUSA is my largest holding in my current ISA as well. Total cost of that position is £4,260.81. So that is how much of my money I have used to purchase VUSA. Now the current value is what this position is worth right now. So this position is currently worth more than I paid for it. Therefore, I am up by £96.80. This means if I decided to sell this position right now, I have profited just short of £100 on this position. But I'm not going to do that because this position is I'm very much wanting it to be there for a long, long time. And quite frankly, I'm not happy with taking a profit of £100. I want this to grow and grow and grow over decades and decades. So I just don't really care if it's up £96 or it's down by £20. Whatever it needs to do, it can do it. I'm not interested right now. Anyway, the next holding So the other holding in this portfolio is the FTSE Global All Cap. Now, I always forget that I actually own this one because I don't have it in my current ISA and I just forget that it's there, which is probably quite a good thing actually. You know, just forget it, set it and forget it, or whatever the saying is. And that's 30.22% of the portfolio. It cost me £1,890.98 to buy, and the current value is also higher than the total cost. So I'm up on this position by £28.15. This is, of course, a lot nicer to see. It's always nicer to see green numbers in your portfolio, but this is where the psychology of investing really comes into play. You've really got to try and detach yourself from associating positive returns with feeling good. Let me tell you why. Obviously, it's really nice to have made some money, and it's probably more important to have made money if you're selling out of the positions now, of course. But if you've got the long-term mindset, then actually it's more important that when you're trying to buy into the market, when you're trying to purchase more stocks or more funds, whatever it may be, that those prices are lower. Because the lower that they are, the more shares that you get, therefore the better return in the long run, providing it goes up. And I mean, when you're investing in things like VUSA and just general ETFs that are tracking the market, then you're probably quite safe. You know, you're betting on an average return. You're betting on the stock market going up over time, and that's probably going to happen, right? Unless something catastrophic occurs. I think it's really important that you think about the psychology of investing and how that can manipulate your mind. You need to control FOMO and trying to sell out of positions when it slightly drops, because you want to have strong convictions and you want to be in the market for a long period of time so you can see the power of compound interest. But anyway, that's not what this video is about. I got off on a bit of a tangent there. What I wanted to say is last time we looked at this portfolio, so over 2 months ago, both of these holdings were actually red. So the FTSE Global All Cap was down by nearly £60 and VUSA was down by 44p, which meant that combined I was down by £59.76. You can see that the portfolio is actually up by about £125 now. Like I was saying, I don't actively invest into this portfolio anymore, but just in case you're interested, the reason that I have the FTSE Global All Cap alongside VUSA is because I wanted exposure to some smaller companies. So with the All Cap, you obviously don't just get large cap companies, which is what features in VUSA. So I wanted that exposure, and also it's global. You're getting companies around the world. But I am wanting VUSA to be my biggest holding in this portfolio, and that's exactly what it is. So let's just flick over to the performance now. I've got this set to since inception, so since the portfolio was born. I don't know how to say that. Since I opened the account, right? So January 2020. And we can see that since then, my investments have returned £271.82 to me with the rate of return here. That is not an awful lot. There are many, many things that I could be doing with my time that would return me way more than that over the same time period. But what you've got to remember is this time period is actually really, really short in the grand scheme of things. And the whole idea of investing in things like this is not short-term gain, right? It's not short-term gratification. It's really a long mindset that you've got to have here. And it's the power of compound interest. And once you learn exactly what compound interest is, you'll be more okay with seeing such small amounts returned to you in a long period of time, because you've got to really stick it out and wait long periods of time to actually let that take effect. Sorry, I keep waffling on about long-term mindset, but I just think it's really, really important. Anyway, let's just have a look month by month. So when I last filmed one of these updates, it was in December 2022, and you can see that the market loss was crazy, £273.96, and it was really bad in September as well. Wasn't so great in November, but still. But anyway, you can see that it's had 2 good months so far. So January and February have been really, really nice, with personal investment returns being 154.88 and 239.13. But what we're really interested in is this section here, what the returns are over time. So added together, so taking the negatives, adding them to the positives, and so on. because some months you might be up by 666, other months you could be down by nearly £300. But it's what that is together. It's not just standalone unless you're withdrawing money. So I said that my cash was slightly larger this time, but I've also said that I didn't pay any money into the account, and that's just because I got paid a dividend. So on the 17th of January 2023, I got paid my VUSA dividend, which was late, and you'll know that if you watch any of my dividend income update videos, but I got £14.60, which was a really nice amount, and that obviously bumped it up from last time that was £61.31 to £73.61. You can see a bit of interest here and some fees, but you know, they're very, very small anyway. So that was nice. And the plan is to use the cash on the portfolio to buy more VUSA, most likely, and then leave some in there just to pay fees. The reason I haven't done it up until this point is because I want to make sure I have enough money on the account to buy a share of VUSA at like 62, 64, whatever it is right now, but also have money to buy to pay for my fees. So I wanted it to get over 70 before I considered that, which it is now. So I should really get on with that rather than just letting cash sit there doing absolutely nothing for me. So like I was saying, my largest holding in this account is VUSA, and the largest holdings within VUSA are the likes of Apple, Microsoft, Berkshire Hathaway, Amazon, things like that. They're the largest holdings, and we could go in and actually see that. But what I wanted to point out is that this portfolio is now kind of an insight into how the market's doing, because I'm not actively putting any money in. The largest holdings VUSA, which follows the S&P 500. So you can kind of see how the market's doing just by looking at my portfolio. So let's just take a look at how VUSA has been doing. So we can see over the last 1 month, VUSA has been doing very well. But if we go over the last 6 months, not so well. So let me just go to the last year. The last time that I made a portfolio update was around the 6th of December sort of time. So let's just get that on here. Around there. So what we can see is since then it's gone down, it's gone down, it's gone up, down. But right now it's in a better position than when I last filmed, which makes complete sense because my portfolio is in a better position. But look what's happened since the 3rd of February. It's just gone on a bit of a downward trend, which is really interesting. And then you've got to ask yourself, well, why is that? What is in VUSA that would be causing that to happen? So what I would suggest is looking at some of VUSA's biggest holdings. So let's just take a look here. We've got Apple, a big part of VUSA. I mean, it's still only like 6% or something, but it's one of the biggest holdings within VUSA. You're not going to have time to look at all like 501 companies or whatever it is, but it's interesting to take a little look into it. Over the last 5 days, VUSA's obviously down by a little bit, but 1 month it's done really, really well. Let's go year to date. Again, really, really strong performance. 6 months, not so much. And it's the same with other companies that make up a lot of VUSA as well. Microsoft, 1 month, good. 6 months, not so good. Amazon, 1 month, not as good as the other two, but still up. 6 months, not so good. But yeah, that was a bit of an insight into my portfolio. Let me know how yours is doing. Let me know also, are you an individual stock investor? Are you an ETF investor? Or do you like a mixture of both? That's all from me for today. If you want to check out my current ISA, the one I'm investing into actively, then there's plenty of those videos on my channel. But if not, I hope you have a great day wherever you are, and I'll see you in another video very shortly.